This week we will talk about weekly and monthly trades. Hello, this is Igor from FX Igor YouTube channel. Today we're looking just economy a calendar, and today we can see that this week will not be so interesting week in fundamental events. The most exciting day will be Thursday, March 24, when we will see S&P interest rate that can hurt Swiss franc. Then we will watch market service PMI for British pound and durable goods orders for US dollar. What is the important thing? None of this news can change and switch the market in some direction. But this week is like previous several war between Ukraine and Russia is the still major event that impact the whole market. And what we need to add to this week, we have a little bit problem in Japan and related to Japanese yen that is going down, but later we will further discuss about that. So right now we need to monitor, of course, the first day as very important day for several currency pairs. And of course, if you want to enter into British pound dollar or any currency pair related to British pound, the Wednesday, March 23 will be idealistic for that, because we see that opening range is finished and that price is below important levels. So let me go to charts and discuss about that. On the charts, we can see interesting facts. Right now, the British pound dollar, we can see moderate bullish recover from the bearish cycle in the February and beginning of the March. However, we will see further tomorrow when we have important news for British pound. Will this trend continue? So right now I'm flat. I will not enter into British pound dollar any trades. On our screen we don't have some important candlestick patterns, even some fundamental news that can push British pound higher. If we saw the gold, right now we are completely out of scope of the gold, because we have a bullish trend, bearish, we follow bullish trend, then we have a short-term bearish trade, and now we are flat because we see that the market going sideways, and news from the Ukraine-Russia war can change and put gold under pressure. Not just gold, the whole commodities. So we need to be cautious and do not enter strong positions right now in commodity market. Commodity market is highly volatile right now and overbought in the last several months before the Russian-Ukrainian war. So we need to be cautious right now when we talk about commodities and gold, and I'm trying to be out of all trades. The good thing right now is that we have a euro dollar, and the euro dollar is keeping around 1.1 level. So this level is very strong, and if I see some strong push below 1.1 level, maybe I will enter a sell order for euro dollar, but right now I'm flat and I do not plan to enter into any other trades. What is the very interesting this week? It's a Japanese or Japanese pair like Canadian dollar, Japanese yen, US dollar, Japanese yen, etc., etc. As you can see, we see strong bullish trend for US dollar, Japanese yen. Actually, we have a strong bearish trend for yen. What's happened in Japanese market? The Japanese finance minister Suzuki expressed concern around the recent market moves, which were based him quite large, and reaffirmed that the government will make use of the COVID reserve fund when necessary in the next fiscal year from the April 1st, I think. And in addition, Suzuki admits that the yen depreciation is both positive and negative for the economy, but currency stability is crucial. And Japan imports around 80% of its oil consumption, which countries to weigh on the yen in light of the elevated oil price, while the weaker yen makes Japanese exports more attractive. So what we have right now, we have ability that some people expect that we will have interest rate increase in Japan, and that didn't happen. Why? Because I think inflation in Japan is 0.9%. It's not so high like in United States or Europe, and very smart. Their politicians and governors, they know that there's no reason to increase interest rate, and a lot of traders and a lot of people were disappointed because of that, because everybody expected every single country right now in the world will increase interest rate and try to decrease the inflation. But in Japan, inflation is not a problem, and like I said, weaker yen makes Japanese exports more attractive. So remember these sentences, and this is the very important thing. We see Japanese that's falling down, and a lot of currency pairs we see like US dollar, Japanese yen go to buy. But this is the little bit I need to tell in fundamental perspective. It's a little bit push. A lot of times in trading we can see the market will go in some crazy direction sometimes, and right now I do not see a reason do we have so strong bearish trend for the Japanese yen. And I know that a lot of people will not agree with me, but I really track the market there. And I will repeat the sentence again. So weaker yen makes Japanese exports more attractive. So remember this sentence, because in next days we can see the recovery here, and I think that I see already that there is some kind of intervention right now in the Japanese market, and it's not so strong, but there is intervention, and we can see maybe some push in direction. If you are like a speculative investment and short trades or something like that, maybe right now we are somewhere very high. So I will just mark this level around 121. The next important resistance is 124. Remember that. But I think that right now here we can see reaction, and we will see what will happen. But I see high possibility to see some kind of reaction here. So we will wait. We will see. I'm flat right now, but I'm looking to sell in some moment. Just I need to see intervention, to see some fundamental push, and then I will react. So I need additional trigger right now. So let me see just about US stocks. This is a very important moment, because I just want to add about information about US market. US stocks advanced on Tuesday as investors continue to weigh hawkish remarks from Federal Reserve Chair Jeremy Powell alongside the ongoing war in Ukraine. And Monday that saw all three indexes cap last week winning strike to close lower after Powell signaled the central bank was prepared to act more aggressively to rein in inflation. And we have right now the words, we have Powell opinion about this, and we see that the government is prepared to go and fight against inflation. Because of that, we see that the market react that. So whole last week we had a bullish, as you can see, bullish several candles, and this week something important happened, because the daily moving average 200 is broken right now. So today close will be above daily moving average 200, and this is the strong indication in trading. If you're a trader, you know that this level is very important. So we can see a push maybe up to the next level, and it's around 4,592. So we can see push here. I am in a bullish position from the last week, and I'm something about here. This is my position here, and I put a stop loss here where is a Friday low, and I'm 100% in profit. So just wait to see will price try to achieve this level 4,592, and if I see, I will exit the trade and I will monitor. It's a really little bit short-term trade. I know for me it's a little bit short-time trade, but I wanted to use this hawkish reports and hawkish report that we have last week and this week, and I want to try to create some kind of speculative short-time investment here, and I will wait to see what happened, but I monitor this and I hope to see some profit. So people, I shared my opinions, my trades and everything. You know, this is not investment advice channel. This is just my personal opinion about market and everything, so you know everything about that. And I hope that you enjoy. If you have a question, you can ask, you can put a comment in this video, and the next Tuesday, I will answer in your comments if you have a question, and I will prefer maybe a live event if we have enough visitors to watch and enjoy and ask questions related to financial markets, stock market, and forex market and commodity market, and this is it. So I wish you great day, and bye bye.